Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show. And we're going to analyze what happened in the market during the last week and then try to learn something from it and also plan for limited trades opportunities for the next week. And this is for the week that's starting from tomorrow, Monday, February 13, 2023. And before getting on, please subscribe if you're not subscribed, and if you're still watching it, and also share to your friends so that we get few more subscriptions to keep us motivated to keep doing this every week. So let's get on. These are the weekly charts that you see here, right? For the Nifty and the Banknifty, that's Nifty on the left side, Banknifty on the right side, and you can clearly see that it's a small body indecisive dodgy pattern that you're seeing on the Nifty as well as on the Banknifty, and it's also at a support zone, very clearly at a support zone, which could act as a resistance. Clearly seen there. Banknifty also, it is at a support zone which is acting as a resistance, and that support zone is nothing but the trend line resistance where it had given a breakout earlier. On both indices, it's exactly at that place. It's facing resistance and it's indecisive whether to go up or make another low. And that's for the weekly. All right. And daily charts, it's a descending wedge. Market had done a fair bit of retracement, making new lower lows, and then another bounce up, and again on the top of breaking out of the new lower high, and then indecisive again. Same as Banknifty also. It's on a descending wedge, and it also has formed indecisive candles, small body candles on the Banknifty. Small body indecisiveness is are in par, right? Basically, Banknifty, if you see that it's an inverted hammer, long week that shows selling pressure. That's where it is. Let's have another look here. This is weekly chart. So this is the trend line that we are talking about, where the resistance is felt, and where the breakout earlier happens weeks back, and now it had breached that and then tried to climb back above that. It has already climbed back in the Nifty, but trying to hold on to stay above that. That's what basically Banknifty on the edge of that resistance zone where it had fallen down, and then it was clearly decisively broken and closed above that same resistance support, which is earlier support. That's a way. We are still much far from the weekly moving averages of exponential moving averages of 200 and all that, and we managed to close above the 20 weekly moving average as well on both indices. But yeah, at a support zone at the same time, neither want to go up or down. That's what is formed on the weekly basis. Only bands have clear consolidation is shown on the daily. Weekly also is clear consolidation. The bands are trying to stay flat. That indicates sideways movement, but it's bearish bias because the close is not happening above the 20 moving average, which is the median of the Bollinger Band. So let's get back the numbers and see what absolute flat. Absolute flat, just 2 points, 10 points plus, and 2 points plus in the Nifty. That's the way. But it's still managed to close above the 20 week average, and it's clearly consolidating. Right, and it is just on or above the trend line resistance. We've seen all that, and close is a dodgy on the Nifty, and it's again a dodgy or a very small body, in this same candle on the weekly basis that you see on the Banknifty as well. Daily basis on the Friday close, it's flat again, minus 37 points on Nifty and plus 5 points on the Banknifty. Small body, dodgy, indecisiveness, it's all seen on the daily as well as the weekly charts, right? And it's closed above. It stays where it is, closed below at resistance, below the 20, 50 and 100 EMAs on the Nifty and 20 and 50 EMAs on the Banknifty. So in a way, Banknifty is slightly bullish, more bullish you can say, than the Nifty. It still has a 200 EMA support downside, and it is holding the 41,500 on the Banknifty, and the 17,800 is also held with a close flat at 17,850 kind of levels. Right? So all the bands, as we have seen already, it's a contraction sideways, with a bearish price is what we have. Let's move ahead. So Nifty levels of supports, making out of these levels, it managed to close above the Fibonacci 50 retracement as well after having bounced on this 61 retracement. So it's about 7900 would be the resistance upside. 7959 about that. 18k rounding number. 1870 Fibonacci 30 retracement. And 18142 200 262. That's how it goes. So the crucial zone would be whether it will be able to close above the 18k now. Immediate major resistance to look out for the next week. After that, the lower highs at the 18200 nearby zones, whether that goes negated or not. That's what we look at. Downside, similarly, we have the first support at 17 800 would be a good support, and after that 760 was very close by, and then rounding up to 700, 7650, so previous singles, and then the Fibonacci 17 560 and Fibonacci 61 support zones, and after that 17500 would be a support, and after that is breached, then you have a gap support down there, so it's very close to the previous single, which is 17300. Moving at Banknifty, the immediate resistance will be at 41 600 zones, 586 producing high resistance, and then 41 835, 42 231, and Fibonacci 53, 42 566. The rounding numbers in between 42,000 and 41,500 zones. Downside support would be to hold on this 41,500. It has been hanging on at 41,500 zones, and if that is breached, then we have straight leap to the 41,000 rounding number and 41,095, which is the previous window. If that is breached, then you have 4800, 47,860 to be precise. That's what the Fibonacci 50 support zone is. If that's breached, then you go back to the Fibonacci 61, that's 39,990, that's 40,000 rounding number nearby zones. Then you have 39,759, and then the previous swing low is 39,200. Goes like that. So that's for the supports downside and the resistance upside on the Banknifty. Let's look at momentum and the trend now. The weekly charts is what you see on the left side, Nifty and the Banknifty. Weekly charts are showing that the momentum is sideways flat. Right? Very evidently you can see it sideways flat. In Banknifty, momentum is again on the sideways flat. That's what you see. To be more precise, you can see that Nifty is sideways with falling on the short term, and Banknifty also sideways, but it's rising momentum there. And the medium term, if you see, it's a sideways flat, and it's sideways flat on both medium term. So momentum is sideways in a nutshell. You can say slight edge of better momentum on the back. You see the ADX indicator is what you use for trend indication. The trend, it shows its trend remains bullish on the short term. Right? The trend is bullish, but that bullishness is not having the strength on short term on the midfield Banknifty, and on the medium term, the trend is still negative, remains rising. So medium term trend remains bearish and short term trend remains bullish, but there is weak strength in short term also that we have. So overall, trend is not that great. All the momentum is flat sideways. So trend also you can summarize from all the multiple time frames. You can summarize that's also kind of flat or sideways. Right? So overall momentum trend sideways. Also, I think big call off for some strange reasons. There's no fear at all in the markets, and 11.5% of dip cool off has happened on the VIX. And remember, we had 17%, that makes 28.5% of cool off just in 2 weeks. 12.74 for the VIX lower regimes and getting to the lowest nearby the 10, 11, whatever zones. Right? So that's a time when there is the mean reversion that can happen where the VIX could spike after a substantial 30% of dip. Obviously, it cannot, and that kind of move also has not happened in the Nifty. Nifty stayed flat, but VIX dropped coolly. So there is some disparity in there. So there is a chance that the VIX could spike up and then create all kinds of troubles when the markets can crash. That possibility is there. You have to be very cautious when the VIX is at a very big falls like this happens. So analysts until the market also moves like that, we have to be suspicious of something. So that's something to keep in mind. VIX cooled off, but markets has not risen that much, and VIX is at a very, very big substantial cut and at a very, very lower region, getting into the very lower regions of the lower VIX regime. Right? That's what volatility is talking about. But overall, VIX cool off is good. The fear is less. One way, if you look at it again, into that way as. Open interest analysis is showing that we have a bearish bias on the futures wire. It's like it's a long unwinding and on the Banknifty, and the short build up that happened on Friday on the futures wire. And this analysis for the options wire for the February 16th weekly expiry. It's going to come next Thursday. There on the PCR, the put call ratio seems to be doing good, like not too far from the bullishness. 0.89 and 0.84 is closer to the bullishness, you can say. Right? So PCR seems to be fine. Futures is negative in the short term. The last build up in futures is not that great, but overall put call ratio seems to be close to the bullishness for the next expiry. And look at the levels. Like it's a 17,800 and 18,000 highest resistance is matching with what you see in the charts as well. 17,800 seems to be a very good support, definitely. The second, that's what the highest put and the highest call writing in support and resistance are seen. The second highest put and call writing is in 17,000, 18,500. That's way apart. So all of this writing is happening at the 17,800 and 18,000. Yeah, that's all the Nifty that we're talking about. Nifty 41,500 straddles is what you're seeing. So put and call writing, highest number of puts and call writing is the same zone of 45,000, 41,500. That's very crucial. If that breaches, then we have all kind of short covering rally that could happen. Right, either side, long unwinding or short covering could happen if that, because it's a straddle that's written at 41,500 on the Banknifty. So Banknifty, you can see that it's not likely to. It's a very tight range. So next few days, nothing is going to happen, but markets could give surprises and gives short covering or long unwinding rallies that could happen either of the side. We have to be cautious on that as well. But Nifty clearly is range bound, 7,800 18,000, exactly as what the charts are showing. Put call ratio, we already seen that's close to the bullishness, but bearish build up is what you've seen on the last Friday's futures high. Right, that's some substance of the open interest analysis in the field bank. Let's move ahead. What do we see on the industrial sectors? How do they perform? Let's try to analyze and see. What we see is last week was metal got further beaten down 2.3 again. This big crash that's happening. The metal, will see that the charts the next, and auto also went down. Auto was one of the leading sectors. Auto and FMCG that got beaten down 1% down. FMCG also went down 2.5% down. So the two leading industrial sectors was both beaten down last week. That's what happened. Not good. And what did well was IT, nearly 1% up. IT has been doing good since long. So IT did well with the pharma, 1% up. It's also had beaten down and also has seen some. So the help came in from the different sectors of IT and the pharma. Has got something to do with the US, both of them. Right? So reality also more like 2.2% up. But otherwise, the auto and the FMCG supporting the market went down. Metal further went down 2.3%. So that's what is happening. So at least bullish zones in the short term, but medium term still has to go to catch them. So we had to be cautious when you're making long. So we had to wait for the weekly also to catch them. Metal stay out in the bearish zones. Negativity still may take a long time to climb back on the daily. I'd wait for the daily to move to sideways at least before thinking about anything. But medium term it's sideways still. Auto sector sideways overall, we can say right now. It's slipped to the sideways, you can say on the short term. Pharma, momentum is overall sideways, not in the various zones. FMCG is also falling to the sideways, but more intermediate is bullish. Reality is overall side is both time frames, you can see. So the summary is that we have two leading sectors which was driving the market the last few weeks, has got beaten down, has fallen in the sideways zones. Yeah, metal is deep trouble. IT, which is IT in the pharma has moved slightly up, and IT seems heading towards bullish zones further. Let's look at the charts and see more of the sector. So left side column, what you see is the IT. It's in a parallel channel and it's a lot of resistance. There's a gap, but it's slowly rising up and still not in the bullish zones yet on the medium term, but almost there. Let's see whether it will be able to take out and break out of that channel or not in the coming days. Below we have the metal, which has got at all-time levels 3 weeks before the Adani saga, and now got beaten down left and right, and then struggling to maintain that levels at the support zone where it had made a swing low. And momentum is it's in the bear zone stability on short term, but medium term is very close to a support of the momentum RSI 40. Let's see if that holds on there. So Overall bearishness in the metal, bullishness in the IT is what you see on the left. Now, in the mid section, you have the auto and the pharma. Auto was in the all-time high nearby zones, met with the resistance, has given a pullback, slipped slightly in the bearish zone, so we didn't know. Let's see if it's able to hold on there. Would it fall down to the neckline again, and would it manage to bypass that and then move further up and break out, all-time high? Keep it close, but you have to be cautious. Oh, has almost slipped down into the channel, parallel channel, and then climbed back. Teams who have taken the RSI moment support at on the medium charts, and yeah, long way to go. But it did attempt to come out of the fall. That's what you can see on the medium term charts. FMCG is also was an all-time high, just like the auto. Met with the resistance. Let's see if that falls back to the trend line or the rectangle pattern and survives. But momentum is still bullish, so still have a hot, probably say resistance that is played out, and it is gaining for it's consolidating for some period of time before it gains more energy to break out from that. So that's what it sees. So almost seems to be better person than the auto, at least with respect to the momentum. It does not slip to the bullish, slip to the sideways on the bullish zone yet. FMG is still strong, but bad week for the last one. Alright, last week was not that great. Reality is still consolidating at the neckline of the breakout zone, and it's zigzagging between a box rectangle pattern. Sideways, flat sideways movement continues on the reality. It has gone to the bottom neckline zone and then bounced up. It was green close on the reality last week, right? That's a summary of the sectors, industrial sectors, how they performed. All how high, hops high on the IT. That's it, and FMCG, right? Others are all sideways and worries are there on the metal sector, right? That's a summary. Moving on how the industrial heavyweights, we're talking about the 7 heavyweights that contribute most to the index. HDFC Bank, still in the bullish zone. Look at the move with the candle. Clear bullish on the momentum. Multiple divergences, which is bullish in nature, and not ready to go and slip in the sideways at all. Clear, clear bullishness evident. It's a black and ball, but the only thing is it is unable to break out just because it's a heavy bear zone in the past. So if that breakout happens 1726 today, tomorrow, next week, next month, when it happens, it will be really big. Right? But it's absolutely not ready to give any indication of bearishness on the chart, since all this Adani whatever story has been happening in the last several months. It's simply not ready to go to the bear zones, although every time it gets to form very wide range bullish and bearish candles, it's not ready to show them that it's going to fall down at all. It's very evident from the charts, right? HDFC Bank is what you're talking about. No, HDFC Finance, yeah, not the HDFC. It's showing an indecisive candle contrary to the HDFC Bank. So something is happening in the HDFC Bank. If I was buying heavy, selling heavy, whatever, something is different. HDFC indecisive closes what on the weekly. Normally this goes in par, but HDFC this time has closed with a dodgy indecisiveness. But there also it's a flag and fall pattern. It's clear momentum bullishness, and it's already from there as well. HDFC. Going on lands, it has come down to the neckline of the breakout zones, and then as expected it has taken a support there and formed a green candle, and then most likely maybe trying to move up the journey towards the top of it. But momentum also has climbed this and taken a support at the bullish zones of the sideways zones now, like 40. Right, so it's Reliance Industries sideways movement continues, and HDFC bullishness continues. IT stocks bullishness continues. TCS seems to have broken out. Infosys seems to be taking it slowly towards the fourth attempt to break out of the gap resistance. Let's see what happens. Momentum also is in the bullish zones for the TCS, and almost approaching bullish momentum for the Infy, but not at there from the momentum for the Infosys, right? So clear bullishness IT stocks. And coming to the 6th and 7th, it's quite ICICI Bank and Kotak Bank. ICICI Bank had got beaten down, but came back with a beautiful bounce up after bouncing the support zones. And last week again hit the same resistance, which is in a line which is acting as a support earlier. After the breach, it's a resistance now. It takes time to climb back, but yeah, so sideways continues after the big bounce up from the following the crash. Kotak Bank sideways as usual. Right, nothing much happening. It had slipped to the bear zone but climbed back. So That has been happening for several months or probably years. It's not doing much, but but doing simply sideways. Right? So in a summary, you can see that HDFC is doing good, lands at support, IT doing good, HDFC Bank facing resistance at resistance, Kodak climb after falling, climbing the sideways after falling, and then continuing the sideways journey. That's a summary. Moving ahead, institutions, how they participate. Fyers surprisingly were buying more than 1,000 crores on Friday, but net to net of the week, if you see, it was selling 3,200 crores of selling is what Fyers has been doing. And they had been doing week on week, day on day. They had been doing nothing but weekly. Once they buy and then they sell rust, and they sell it big. Look at how they sold in the previous week when the Adani story was going on, right? So they sell big. They are net sellers, and that's a concern. It remains to be a concern. But yes, try to buy and then go up with that for every dip, every crash they buy. And last week also, they held from the market from crashing down so much, and 2,287 crores of buying has happened. So the FI participation is a worry for as to how long the market be able to hang on like this. Right? No, global markets and global commodities. Let's see what first begin with currencies. Dollar index has moved up. It's a more than half a percent of up more has happened. Around 3.5. We thought it was breaking down and then cooling off, but that would have stopped. Now it is worst, and then it's closed above the neckline from where it had breached. So that's again a worry. It's hope it's not heading back to the multi-decade highs 120, 115 and all that again. Yeah, as long as it's slow moving, it should be okay. But yeah, that's a lot of the drop of the dollar has stopped, and seems to be reversing now. USD and our currency pair from the inverter hammer. That's flat close, and it's a 2% bounce now that has happened. We thought it is a double top and then break down, but now it is a double bottom and it seems to be breaking out of the 83 kind of level. So 82.49 is bad. Rupee is still at a weakest level since October of 2022. More than that, right? It's above the 80 since that. Yeah, almost near no recovery. Rupee. That's a worry. Crude oil. How's crude doing? Crude is flat. Crude is flat. Crude is flat. Plus, crude was gone very close to this nearby 73, 74 levels and then shot up and then just taken climbed back with a divergence in the momentum and turning to be bullish. And hope it doesn't go back to the 100 levels, which is the top of the channel. Right? Yeah, still remains 80 is a relief. I'd say. Markets were crashing and the goal is breaking out, attempting. But it met with resistance when the markets shot back. But the momentum of the goal is still bullish. Anything can happen. And last week it was kind of indecisive, but did not go. It did not show much more indication of falling down. So let's keep a close watch if the momentum is going to dip further down. And is it going to be a journey down to this bottom of 1614, or is it going to consolidate here and wait for what? We'll have to see that, right? But as of now, gold remains having bullish momentum, while the oil has taken a support and has climbed back to the sideways. Also going to be a response on crude, right? So the last and the final piece is the US markets. Very crucial. US market has been for several weeks. Several weeks in the sense for us, it's 8 or 10 weeks. It has been doing nothing but hitting those trend line resistance of the descending wedge, and then unable to go further up. It's indecisive, and this week it's the second week of indecisive candle that we are seeing on the major index of Dow Jones, and even in Nasdaq also the right side top. You see that it has hit a major resistance zone and then formed the bearish. And S&P, the wider index, is also seen to have hit the resistance in the momentum and then fallen down, and it gave a false hope of a breakout from the descending wedge, but yeah, it's following the path of the Dow Jones. So all you can say it's a flat and indecisive US market that you're seeing there, right? With all of the candles of the major indices, Dow Jones, Nasdaq, and S&P 500, all of them slightly bearish, and then seems to be feeling the heat of resistance, clearly on the charts, and probably all of them are trying to break out, but it's facing the resistance what the last charts are showing on the weekly, on the medium term. Let's move it and have some stock picks for the next week. Like persistency, I've been talking about this in several of my tweets and several of my previous week, and so it has great volume. And I'm sorry that I missed out on showing the volumes. Let's get back and see the volumes ourselves. Persistent systems weekly charts is what you're seeing, and look at the volumes. It's beautiful volume based breakout is what you're seeing there, which is make it super bullish. Momentum is bullish, trend is rising up, and as per the ADX, and it's a rounding pattern at an all-time high zone. Now if there is a price action that is taking the price above the candle's high, that's the time for you to enter with a tight stop loss. RiskReward is good. The breakout could go much. See, when there is a rounding pattern, sometimes it can go at least more than half of the width of the height of the rounding pattern. Let's not go for that. At least 2% is sure, that we can aim it, and then we can trade from there. So that's good RiskReward, good volumes, the trend and momentum in weekly charts and short-term charts. Clear bullishness. IT stocks, IT sector also is doing good. So, but you have to be cautious. It's at all-time high. US markets have some resistance. You have to be cautious when you're playing this, right? But persistent systems, long call. For possibility of a long swing or trade opportunities are there. Polycap, it's an electrical company. I've been talking about this stock also. It's a rectangle pattern. Breakout is confirmed, and with a lower, the risk reward at the breakout zone neckline, you can take long calls, and it could be rewarding because the momentum indicator RSI and the ADX is clearly indicating bullishness and rising bullishness. Right. So two stock picks. One more. That's on the Nifty. That's on the option strategy. Completely risk defined, non-directional, and option strategy. So now we have the VIX that is low. We are going for a double diagonal spread, and this could benefit if there is a VIX rise that happens, because we have the hedge positions of the strategy. The hedging legs is taken for the 4-month OT impulse, and the and the selling of the near month is also happening at 7650 and 1850. It's giving a reasonably fair probability. Risk reward depends on how early you would exit before the expire. So if you're targeting, ideally you should target for 1 to 2% per week. It's consistently will give you a reward. 1 to 2% only exit. 1 to 2% exit. Every week you get that. Probably it's less. Risk reward could be rewarding if you go follow these rules. It's going to be a beautiful range. 17,605, 18,000 to 118. So the assumption is that 18,000 will give good resistance, and 76 will be good supports. Maximum well can fall back after this bounce. Right. That's a good range, and in case you need to resist, you need market give surprise, then you have to adjustments. Right. If there is a breach of this 18,000 that happens, that's the time when you have to either exit that and then extend it, or you can roll down the put side closer so that you benefit for that way. You can keep rolling down, or if the market falls down, you can do the same thing and roll down, or you can exit that. That's up to you. But normally I do the adjustments when big moves like that happens, giving surprises. No, but ideally you may not need to. Market may not fall this much big in the 3 days or 4 days maximum trade that you keep. It may not happen. That's why it could be consistently profit making double calendar spreads, right? Especially when the VIX is at a very low level and we expect that spike up from the VIX. It could happen, right? Let's move on. And now that we have seen the different things, let's wrap up. It was damn absolute close, flat close is what we saw in both the indices, definitely. consolidation and sideways movement is in the cards, and then indecision is shown by the doji that formed. Market is indecisive. It is closed. It's not doing anything. It's flat. It's consolidating. It's sideways. It's indecisive. And the whole aim of that would be to hold on to that climb back above the trend line resistance, which is earlier support, from where the earlier all-time high breakouts happened. So the intention is to just maintain the close above that. That's what market is trying to do. But there is a possibility that market fails in doing that, and then new lows happens, right? After the swing high formation, it could fall down, or it could break out and negate the lower highs. I mean, not higher. We're talking about always lower lows and lower highs, not higher highs and lower highs. So that's what we'll keep a close watch. So the trend momentum definitely bearish. The trend is sideways, not bearish yet. On the short term, we're talking about. So overall, in general, it's a sideways trend. And bearishness, it's still there in the short term. So Bollinger Band is also sideways of bearish biases. If I keep selling, all the Friday that's a buy that happened. Using dice resistance, anything could happen. Face resistance, bearish close, indecisiveness, everything is saying because dices. They're all in favor of bears. Price action is flat, resisting below the 20-day moving average. And there is a 200 Fibonacci support levels and all that. PCR is close to bullishness only for the US band, but yeah, which is cooled off 28%, which is good and bad both ways. Right, so there's a chance of like up. So overall, I just summarize my view as neutral sideways with my bearish bias for the next week. Right, that's my view. So what happened last week and previous week was a budget and the following budget days. Budget benefits for students got negated by the Adani. That still remains. So market may have digested and then make the movement, made the crash and the up move and all that may happen. But if the negative news flow keeps coming, later to that, then there is a big chance that it can crash again, and then it could be in trouble again. So I'll be cautious on that. But the VIX is not showing that VIX is completely cooled off. It's 28% in 2 weeks, 11%, 17%. That's kind of fixed cool off in a 7. These markets are indecisive, but there is a possibility it can break out. Right, so that's indecisiveness that's prevailing, right? Uncertainty prevails is what you can say. Right? Global cues are not that great. Still, if inflation worries is still there, Fed hikes still remain, recession worries are there globally, and all these things still remain there. So anything that crude has been cooling off, not this week, but overall crude is still below the 8, which is good. But rupees are worried. Rupee keeps spiking up. Dollar also is not cooling off as expected. So it's reversing back. So it's all worries. So keep a close watch on 17,300, 36,800 levels on the downside on the indices, and 18,200 and 43,000 on the indices on the upside. Right, that's the levels on the medium term that you will watch out for. Anything below that would be a crash and means further bearish moves, and then anything above that could be possible up move or end of the correction. Right. So that's my view. Neutral sideways with bearish bias view is what I have, and yeah. So always, as I say, hedge your strategies. Don't go for naked calls. You should know what exactly you'll be losing so that your capital remains there for the next opportunity to make money. Right, and so make use of the option strategies even for investing by using. You check out my playlist for different trading strategies and options. And hedge your positions, I always say. Right, protect your capital. That's the key. Risk management is the key. Right, trust is probability of the levels that we learn from the charts and then trying to bet on that. Right, so thanks for watching. One more thing is we have some premium subscription services also on Telegram. If you may like to do that, and regardless of that, if this video and the content of the video has helped you in some way to frame your trade plan better for the next week, then definitely consider hitting the like button, putting your feedback, comments, etc. And then share it to maximum. We have review subscription. Appreciate help. Thanks for watching. Happy trading. Happy learning. Bye bye.